Hi, welcome to the Retiring Well TV show. Folks, we got a great show lined up for you today. If you have money in the stock market and you've been watching things this year, has it made you nervous? I'll bet it has. Listen, today we are going to talk about the fundamentals of the economy. What are the things we're supposed to be paying attention to? We're hearing all kinds of news. When we hear things like GM closing plants and having layoffs, is that something we should be concerned about? Well, folks, we're going to talk about that today, so stay tuned.
Retiring Well, helping you make smart decisions with your money so you can live a better life. Today is the day you can take back control of your money. Retiring Well, where we believe your best is yet to come.
Hi, welcome back. Folks, listen, what we're talking about today is the fundamentals, sticking to the fundamentals. You know, what are the things we need to be most paying attention to when we're looking at the markets? If we're invested, we have money in the markets, this is a concern for us because, let's face it, we don't want to lose a lot of money, right? We remember 2000 through 2002 when the market lost half its value. We remember 2008 when again the market lost half its value, this time only in a 15-month period. These are fresh on our mind, and so when we've been in a good period for a long period of time, it just feels like the shoe's going to drop at any time. So what is it that we really want to be paying attention to? Well, first of all, what is a bull market when things are going well? Well, by definition, it's just when we haven't had a greater than 20% correction in the market in over a 2-month period of time. Think about that. We haven't had a greater than 20% drop for over a 2-month period. And we haven't had that since March of '09. So what is GDP growth? That's something we need to be paying attention to. Now, for the longest period of time, it was running around between 2 and a little under 3%, right? And we were in recovery. Of recent, last couple quarters, it's been 3.5%. So we've seen GDP growth really be quite higher than it's been historically in probably the last 10 years. Is that a good thing? Well, absolutely that's a good thing. Because as long as GDP growth is good, that means our economy is still in recovery. It's still, for all practical purposes, growing. When we start to see GDP growth start to slow, maybe that means something, maybe that means the economy is slowing down, right? Maybe that's something, and if the economy slows down, that means corporate earnings are going to be less, which means that the markets are probably going to drop a little. So what's that also tell you? Something else that we need to be paying attention to, which are the fundamentals. That's corporate earnings themselves. Think about it. The market is always traded at a multiple of what those earnings are. Now, in our world, we call that a PE ratio, price to earnings ratio. But all it is taking what all the corporation earnings are, and the market, as it's trading, is just at a multiple of that. Now, historically, the markets have traded around 16, 17 times earnings. So when we look at the market, we want to be constantly looking at what is that PE ratio? Where is the market? Now, if it's trading at 30 times earnings, what's that telling us? That's saying that it's trading at a very high multiple. Is that sustainable? Well, it's sustainable if the expected earnings can come up to match that, right? Very important. So as we look at earnings and we look at the market as a multiple of that, maybe that's a gauge that we can use to decide, is the market priced too high, or maybe it's priced a little bit low. Right now, of recent, in this year, it's been, if you look at what's expected to happen in the market, what earnings are supposed to be, or what they think they're going to be, the market's trading around 14 times earnings right now. Certainly not in what we would call bubble territory, but certainly not more at a bargain either, is it? So corporate earnings is going to be very important. So when you're listening to the news, and you hear these earnings reports come out, they typically come out every quarter. But when you see these earnings reports come out and you hear things like better than expected earnings report by this company, or better than expected earnings by this company, that's a good sign, because that's saying that what they expected to have happen is happening, and so the markets for where they're priced at right now is supportable. A very important fundamental to be paying attention to. When you start to hear things like less than expected earnings reports, or the earnings coming out, that's something that you also want to be paying attention to, because what's that telling us? That means earnings are, maybe that's saying that the economy is slowing down, that earnings aren't necessarily there. Well, markets are necessarily going to follow that, aren't they? So again, when you're listening to the news, you might hear a lot of things happening, but you got to hear that news and say, okay, what's that mean in the overall big scheme of things? Now, what's some other indicators that we might want to look at out there? Well, one might be unemployment. Right now, unemployment is an all-time low. I think they said 50-year low at this point. They say there's more jobs out there than there are people to fill them. All right, why is that a good thing? That means people are working, okay? And if they're working, they have more money in their pocket. If they have more money in their pocket, that means they're spending. And that means they're spending on goods and services, which is good for corporations, which is good for earnings. So folks, when we get back, we're going to talk some more about these fundamentals. What are some other things that are going to affect corporate earnings as a whole? So join us soon. Thank you.
Today's retirement challenges can be mastered. Knowledge is power, because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Tuesday, January 15th at Big Buck Brewery in Gaylord. Wednesday, January 16th at Boone's Long Lake Inn in Traverse City, or Wednesday, January 23rd at Cadillac Grill at the El Dorado Golf Course in Cadillac. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today.
Hi, again, thanks for joining us here in the Retiring Well TV show. Today we're talking about the fundamentals. What are the things we really need to be paying attention to? I talked in the last segment about GDP growth, why we want to continue to see that be positive. We talked about corporate earnings, probably being the biggest factor, because again, the market trades in as a multiple of it. So we want to make sure we're not in bubble territory, but we want to make sure we're not in a place where, we need to worry, right? We talked about unemployment. We want to see unemployment low. We want to see people working, because when people are working, they have more money in their pockets. That means they're spending, right? Which ultimately means better results for corporations. The other thing we want to see is we want to see inflation remain fairly low. Right? Why is that an important factor? Well, what is inflation? It means it's the cost of goods rising, right? And if the cost of goods are rising too fast, what's that mean? That means people have less money in their pocket because they're having to spend more on the goods and services that are being provided to them. So if they have less money in their pocket, and that means less earnings for corporations, right? Ultimately, which means the market's going to adjust accordingly. What's something else we want to look at? What about wage growth, right? Now, this is something the Feds have been scratching their heads on, most particularly in 2018 and even before, because we've had this very low unemployment, And inflation has, for the most part, remained low, but wage growth was not going up. And typically where you get inflation is when wages start to rise, right? There's more, people have more money in their pocket, but there isn't as much goods and services out there. So you have the supply and demand thing going on. And as wages go up fast, it creates inflation. Well, the Feds don't like that. So they want to raise interest rates to try to slow the economy down. So you got these two things. They want to keep a low unemployment and they want to keep inflation intact. But for the most part, with the low unemployment, the inflation wasn't coming. The reason it wasn't coming is because there wasn't what we call this wage growth. Well, now, with unemployment being down for so long, we're starting to see that happen now. We're starting to see that more wages in people's pockets. Well, why is that a good thing? Well, obviously, if people have more money in their pocket, again, going back to the spending issue, right? That means they've got more money to spend, which is good for corporations. It's good for their earnings, it's good for the market. The other thing we want to look at is consumer confidence. How are people feeling about the market? If I'm feeling good about the economy, I'm feeling good about the markets, that means I'm more willing to spend what I have. If I'm not feeling good about the economy or the market, guess what I'm going to do? I'm going to hold back a little bit, right? I'm going to try to maybe keep a little bit over on the side to save a little bit for that, rainy day, where I might need it. So if consumer confidence is high, then that means it's good for the economy, it's good for the markets because people are more willing to spend what they have. Another thing we want to look at is what is small business feeling? You know, if small business confidence is also good, then what are they doing? Well, they're making more capital expenditures, they're hiring more people, they're more willing to spend their resources because they see things are going good and they want to get ahead of that. So very similar to consumer confidence, small business confidence is also a very important thing to watch, because if small business is feeling good and they are the biggest employer in the country, then overall that's going to be good because more people are spending money, and that goes all the way up into corporate earnings, which is good for the market. The other thing we want to pay attention to are what are corporations doing with their money? Are they making the necessary expenditures for capital improvements in capital spending, as we call it, or research and development? If we can see that corporations are spending a lot in those areas, then that means they're feeling confident about where the economy is going. That means they're putting more money into the economy. They're hiring more people. Very similar to, the small business confidence. And when they're making those kind of those expenditures, guess what? That's good for the overall economy. So there's all these factors that we want to be paying attention to that are very, very important. Now, when we talk about all these fundamentals and we see that they're all in what we would call good territory, and the markets are trading within those fundamentals, then do we really have a lot to be worried about? I would dare say not necessarily, okay? But what we want to do is be ahead of this because we want to continue to follow and watch where they're going, because if we see any kind of a slowdown in any of that, then we want to be ahead of that, making the necessary adjustments ahead of time. So stay tuned, folks, because we're going to be talking more about this in the coming segment.
Do you have a plan for how to generate income during retirement? Are you going to run out of money? In today's marketplace, retirees have concerns about the volatility of the market. People have concerns that the traditional balanced portfolio strategy that advisors used in the 80s and 90s isn't good enough in today's new normal economy. There are more secure options available for you today, and that's what we specialize in here at Centennial Wealth Advisory. If you don't yet have a plan or would like a second opinion on your retirement income plan, please call us today for a free, no-obligation, complete retirement review.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Tuesday, January 15th at Big Buck Brewery in Gaylord. Wednesday, January 16th at Boone's Long Lake Inn in Traverse City, or Wednesday, January 23rd at Cadillac Grill at the El Dorado Golf Course in Cadillac. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today.
Hi, welcome back to Retiring Well TV program. Listen, today we're talking about the fundamentals in the economy. What are the things we need to be paying attention to? Just to recap some of those things I've talked about already. We want to be looking at GDP growth, right? Is it slowing down? Is the economy slowing down? We want to most particularly be looking at corporate earnings, right? Because we know the market trades at a multiple of those earnings. So we want to make sure we're not in bubble territory, right? That the market's going to, correct in a big negative way. We want to look at consumers, their confidence in the market, small business confidence in the market, in the economy. Because if they're all feeling good, that the economy is doing well, they're going to be spending more. And when they're spending more, that's good for earnings, right? We want to be looking at unemployment. Most particularly when it's low, because when it's low, we usually see wages rise. And when wages rise, spending's good, right? Folks, all these fundamentals are important to watch, and there's many others that we want to be taking a look at. But we look like in these fundamentals in the economy, we're paying attention to those, right? Now, we're not going to be concerned about volatility in the market as long as that volatility, and liken this to this red line, right, are trading within those fundamentals. Okay? You might say that sometimes when it dips down a little bit and the fundamentals are strong, that might be a great buying opportunity. Maybe when they get up a little bit high on the top, maybe we're saying, hey, it's getting to the top, not necessarily bubble territory, but it's priced a little bit high. So as long as the market is trading within those fundamentals, folks, we're not going to be really concerned about that. And you'll see a lot of that because people react emotionally to the market. When they hear bad news, a lot of people will get out of the market, and that tends to kind of drive it down. So that kind of volatility, that what we would call emotional volatility, because people are reacting to negative news, that's not going to concern us as long as we are trading within those fundamentals. Now, in any kind of what we would call a bull run like we find ourselves in now, I go back to that Sir John Templeton quote, right? Bull markets, they're born on pessimism, they grow on skepticism, they mature on optimism, and then they die on euphoria, okay? This is important to understand because when we see bull markets come to an end, they don't typically just kind of fizzle out. What you'll typically see is in the end of a bull run, you'll see that euphoria stage where the market breaks outside of those fundamentals. That's going to be a time we're going to want to be paying attention because when the markets are priced way up here and the fundamentals are not there to support it, that's probably a time we're going to want to be doing something different or making some adjustments accordingly. So what's the other thing we want to be paying attention to when we're looking at fundamentals? Well, the other thing we want to pay attention to is what if we start seeing some of those economic indicators start to indicate that things are starting to slow down? What if we're starting to see something like this, where those fundamentals look like they're going to start heading downward? Well, you have to know that when that happens, the markets are going to follow that accordingly. So what we call this is what you would call recession, right? That's a ugly word that we don't want to hear when we got money invested in the market, is recession. So why do we pay attention to these fundamentals? Well, one, we want to know when we're in this stage, that euphoria stage, when the market's in what we would call bubble territory, or we want to be looking for early signs that we're not going into recession, because that means the markets are going to react accordingly as well. But again, folks, why is this so important? It's important because when all this kind of volatility is happening, all right, we want to know when to pay attention and when not to pay attention. So every time you hear negative news, you have to say to yourself, is that negative news, will it derail what's going on here in the overall economy? If the answer is no, if it's not going to derail the economy as a whole, then it's probably not something we want to react to. But if it is an early sign of other things to come, or it could derail the economy in a big way, maybe recession, then maybe it's time to make adjustments. Now, folks, we at Centennial Wealth, we meet with our clients every quarter. We have a live event. We talk to them about these fundamentals. We talk to them about what they want to react to or not react to. We like to educate them so that they're paying attention to the things they need to pay attention to. If that's you, if that's somebody that wants to kind of have a better feel for where you're positioned, how you're invested, and how that's reflected with these fundamentals as we see them right now, then we want to encourage you to give us a call. You see the number on the board? Give us a call. Give us a chance to show you how we're handling things in this economy, how we're seeing things going forward.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, Northern Michigan's financial advisors specializing in retirement planning with offices in Traverse City, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn how to use the new tax reform to your advantage, the best way to generate lifetime income, how to identify and manage financial challenges, how to reduce your tax liability and increase your cash flow, how to maintain growth opportunities and reduce risk, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Tuesday, January 15th at Big Buck Brewery in Gaylord. Wednesday, January 16th at Boone's Long Lake Inn in Traverse City, or Wednesday, January 23rd at Cadillac Grill at the El Dorado Golf Course in Cadillac. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825 today.
Welcome back to Retiring Well, here with John Torbett and Art Canfield, financial advisors and senior partners with Centennial Wealth Advisory. And so we wanted to talk to you about a recent conversation that Art and I were having with some folks that came in. They'd been watching the television show and they said, you know, we've been watching for a couple of years and we're getting closer to retirement, but we don't know what retirement really looks like. And so they were just hoping to get some input from us as far as, okay, what is this? Is this a possibility? Can we really retire? And so we started the conversation ultimately with talking about income, because that's really what retirement ends up being.
Right. It's interesting when we talk to people and they have this retirement savings, 401k, IRAs, and they know they're entering retirement or they know they're a few years away, but they've never really thought about, how am I going to take this statement, this number, and generate a paycheck for the rest of my life?
Right. I mean, it seems so often that people are saying, what is that magic number? What do I need to get to, $1 million or $2 million or all these high numbers? And sometimes in all reality, it's, no, you're in pretty good shape based on where you're at right now, because it all comes back to what's your lifestyle, what are those expenses, and finding out okay, what sort of income sources do you have? Do you have, a pension? I know that's becoming less and less, but what about Social Security? What role will that play, and when to draw Social Security? That's part of what we look at on a day-by-day basis. And then ultimately figuring out, okay, with that retirement savings, how to then best generate an income stream to make sure that that money's going to be there for your lifetime.
Right. We like to start out by, just as you said, those known sources, those guaranteed sources. Sure. What do we know is coming in? And then what is that magic, and I shouldn't say magic, some people dread the word budget, sure. Getting to that number. How far are you from those known sources to getting to that number? And then what is that gap, and how are we going to fill that gap to make you get to the place you want to be so you can enjoy retirement that you've worked so hard for?
Yeah, and then the big piece, Art, that I think a lot of times people aren't considering are taxes. That's something maybe you're not familiar with, how taxes play a role, and especially come retirement planning and drawing that income, and what impact it's not just going to have on all of your income, but your Social Security income and what role that plays. And so we were able to just simply walk through, okay, what does that really look like, and at least give you an idea of where your tax rates are going to fall. And that gave us the opportunity, as they were a couple years from retirement, to do maybe some planning to talk about, hey, here's some things, have you thought about doing this leading up to retirement, and might end up saving them some significant taxes down the road.
It's always startling to me, John, and I know when we sit down with people, so often, we'll talk to folks and they've never even thought about taxes along the way. And we simply talk about the withdrawal order of your funds. Maybe you have some Roth money, some after-tax or non-qualified money, savings, stuff like that, and in IRAs and 401ks, and simply by maybe altering how some people think they want to take money out, along with Social Security and stuff like that, it can dramatically swing what your tax liability is going to be, ultimately netting you more money in your pocket.
Right, good point, Art. And so then after that, then we start talking about, well, wait, what about from an estate planning perspective? What have you done so far to prepare for your retirement planning? And in their case, they hadn't done anything. They ultimately said, well, I think I've got my wife as the beneficiary, and she's like, yeah, I think I've got you as my beneficiary, and that was the extent of their planning.
Check for 30 years
right,
since they filled out that paperwork.
Yeah, exactly. And so it's one of those where, okay, let's look at this and walk through what does that ultimately look like, and what are some of the things that we could be doing, talking through that, and then beyond that, getting into insurance, and okay, well, what do you have from a health insurance perspective or life insurance? And so there's a number of different areas that we'd go into.
Yeah, when you start talking about that estate planning, legacy planning, insurance, and stuff like that, it brings up a lot of thoughts. And so often people haven't thought deep about that. And what happens when I'm gone? Where do I want this money to go? Who do I want it to go to? And also, how is it going to be taxed? And doing just that little bit of planning and taking a deeper look at that can really save. You're not doing it for yourself, let's be honest, because you're not here at that point, but your loved ones and your family members, or maybe those charities you want to leave it to, it can be really vital to them and help them, I guess, maximize what you've already worked so hard for.
Right, and then ultimately getting into the investments and talking about what that looks like, and we won't dive too deep into that right now, but as you're listening in and hearing what we're talking about, if you haven't sat down and gotten a second opinion, we'd be happy to sit down with you, no cost, no obligation, and just talk through what does your retirement plan look like. And so we'd love for that opportunity to sit down and have a conversation. So thanks again for tuning in to Retiring Well.